Clicks has reported an increase in half-year earnings in the 6 months to end February. Headline earnings per share rose 13%. That's thanks to market share gains in the health and beauty segments, stronger private label performance and better margins. An interim dividend of 238 cents per share has been declared. This reflects an increase of just over 13%. Looking ahead, Clicks anticipates a challenging trading environment in the second half. It cited the upcoming VAT hike and global economic uncertainties as reasons for the cautious stance. But despite this, Clicks has reaffirmed its commitment to expansion. It's targeting 45 to 55 new stores and pharmacies by year-end and hopes to achieve growth of between 11 and 16% in diluted headline earnings per share for the 2025 financial year. PSG Financial Services has handsomely rewarded shareholders. The group has upped its total dividend by 24%. This means investors will receive 52 cents per share. That's as more favorable equity market conditions boosted the group's annual performance. Total assets under management rose close to 16%, while recurring headline earnings per share ticked up 25%. Jubilee Metals has revised upwards its 2025 production guidance for chrome concentrate and platinum group metals. That's after reporting a strong third quarter. In an operational update for the group's South African operations, the company stated that its chrome concentrate production guidance has been revised to 1.85 million tons, while PGM output is expected to rise to 38,000 ounces. Business confidence lost some ground in March, but SA Inc. remains upbeat. The SACCI BCI lost 2.3 index points during the month. Despite that, the reading is still 8.8 index points higher than it was a year ago. During March, businesses took heart from increased tourism and exports, as well as lower inflation, while a weaker rand and lower share prices on the JSE dragged sentiment down. Retail sales rose by nearly 4% year-on-year in February. This follows a 7% jump the previous month. The slowdown is as a result of a weaker trade among general dealers. Sales of household furniture and appliances also slowed, while clothing and textile sales jumped. Former Free State Premier Ace Magashule has pleaded not guilty to charges of corruption relating to a 255 million rand asbestos tender case. Magashule, business person Edwin Sodi and 16 other high-ranking provincial and national government officials appeared in the Bloemfontein High Court today. They all face charges of corruption in the awarding of a tender for the removal of asbestos roofing from houses in 2014 to Sodi's company. The case has had several delays in the past 5 years, stemming from different factors, including several applications from the accused wanting charges against them dropped. And South African universities face a potential funding gap of up to 1 billion rand as a result of US President Donald Trump's recent moves to cut research grants. That's according to Universities SA. The organization's chair, Francis Peterson, says there's not only a risk to projects, but local institutions' rankings as well. The funding gap could also result in job losses. Further afield, China's first quarter GDP came in better than expected, underpinned by solid consumption and industrial output as policymakers prepare for the potential impact of US tariffs. Let's take a look for more detail.
China's first quarter economic growth beat expectations, even as policymakers brace for the impact of U.S. tariffs that analysts say pose the biggest risk to the Asian powerhouse in decades. Data on Wednesday showed GDP grew 5.4% from January to March from a year earlier, beating analyst expectations in a Reuters poll for a rise of 5.1%. Retail sales, a key gauge of consumption, as well as bank lending, topped analysts' forecasts. Industrial output has also picked up speed as factories rush shipments to beat the latest tariffs from U.S. President Donald Trump.
We have $1 trillion trade deficit with China. Hundreds of billions of dollars a year we lose with China. And unless we solve that problem, I'm not going to make a deal.
However, analysts expect that trend to reverse sharply in the months ahead as the hefty U.S. levies take effect. Moreover, higher unemployment and persistent deflationary pressures are fueling concerns over weak demand and point to an uneven economic recovery following the COVID-19 pandemic. The Reuters poll showed that for 2025, the Chinese economy is expected to grow at a subdued 4.5% pace year on year. That's half a point down from last year and short of the official target of around 5%. Policymakers have repeatedly said the country has ample room and tools to bolster the economy. Premier Li Qiang this month pledged to roll out more support measures. Beijing has put boosting consumption as the top priority this year as it tries to cushion the impact of the Trump tariffs. The ruling Communist Party is expected to hold a meeting later this month to set its policy agenda for the coming months.
And NVIDIA says it will take $5.5 billion in charges after the U.S. government limited exports of its H20 artificial intelligence chip to China, a key market for one of its most popular chips. Here's more detail in this report.
NVIDIA is taking $5.5 billion in charges over U.S. trade restrictions. The chip maker said that the move is a result of Washington curbing its shipments to China. The same day, the State Department said it was further limiting the sale of the company's H20 chips. That was the most advanced model still permitted for export to China after earlier sanctions. The new move also affects products from rival firms like AMD. NVIDIA said U.S. officials were concerned the chips could be used to build supercomputers. Washington has tried to restrict sales for such uses since 2022. The Institute for Progress, a non-partisan U.S. think tank, said some Chinese firms were probably already breaching those controls. It identified gaming giant Tencent as likely to have used H20 chips in a supercomputer. It said the computers that trained the DeepSeek AI model probably also broke the rules. NVIDIA shares plunged around 6% in after-hours trade following the latest news, with AMD down even more. Donald Trump's sweeping global tariffs are also set to be a headwind for U.S. chip equipment firms. Reuters sources say industry calculations put the total cost to the sector at more than $1 billion per year. Among the most exposed companies are said to be chip gear makers like Applied Materials, which didn't respond to a request for comment on the calculations. Costs to the sector include lost sales and the expense of finding and using alternative suppliers for complex components.